Good morning, traders. Yeah, Patrick, you've got it right there. TGIF, and it's far from over. We still have to put the cherry on this week's pie, and it's already been some week, hasn't it? Um, just a little of self-promotion there for myself and the team. Just know that we are still open for business for with our coaching programs. Either myself or one of the team are more than happy to help anyone out who would be struggling with markets in general. In my case, I'm really having a lot of experience, and I'm rather a fundamentalist. Got to be an all-rounder now with the text as well, of course, since we have to. But if anyone is struggling with the fundamentals in the markets, give us a shout. We can for sure help you. The program is quite popular, so please be welcome to give us a little tick on the link. Let's put the link again in the chat room. And then the next one is that we are still running our NFP competition, of course. And again, it is a prize full competition again. As you can see, first place will get a free 30-minute coaching session with one of us. You also get a free 30-day subscription to our platform and the chat room, which is one of the most active chat rooms in the retail market for sure. And you got a free annual subscription to Pixoot as well, our partner. Then there will be second and third places as well, where you get a few more of those subscriptions. The rules are simple, but pay attention. There is a deadline, of course. Hold on a minute. What is this one? Why am I not seeing the right? This is not the right link. Let me refresh this page. And yeah, so the only guesses to the original post will be accepted. So none of our reposts will accept any of the guesses. All right. Putting the link in there, and of course, be in time. Some people try to be a bit funny and have the guess right on the 12:30 GMT, 1:30 London time, and try to be smart, but that is not working. We know when you have put in your guess, of course. We're running a little short of staff, as you know. Ryan is off, so for those who will win the competition, I will get in touch with you, or one of us will get in touch with you either very late tonight or over the weekend, possibly as well, because right after the NFP, I need to jump off the desk today. I have my Tokyo branch of the family arriving, so I need to rush to the airport to get them from Heathrow. So that's it for the non-farm payrolls. Get your guesses in and join us in the chat room. Winning it will also allow you to test what we are doing, judge what we are doing, and see if you guys are happy with our setup, and even tell us if you're not. Right, moving on to what's happened overnight. Look, in geopolitics, it's still a mess. We see the issues between Hamas, Hezbollah, Lebanon, Israel, whatever. So that is still going on, and likely one of the reasons why also stuff like gold and things rebounded yesterday. But of course, the main reason I'm going to talk about in a minute. For the rest, I really haven't seen much in headlines, non-market related headlines to be worth mentioning. China is still injecting a bit of liquidity, but we have seen the CNH strengthen quite a lot, even though the bond market is still very buoyant in China, and people are pushing yields down like in the rest of the world. But of course, we've seen also on the bandwagon of what's happening in the yen and in the Swiss, CNH strengthen a bit again. It's getting a bit volatile out there. Okay, but I don't think that those moves have anything to do with really investors yet diving into the Chinese yuan. Okay, moving on to what's happened then yesterday, and let's quickly get back to the Bank of England. So they did cut rate, they delivered, and it was as expected a 5-4 vote. Spoken enough about it. We had this little blip, just like a small blip lower in the sterling, but then on Bailey's comments, he wasn't really dovish. The inflation rate will still be bumpy. They actually revised it slightly higher in for this year, but then lower for the next years. Also, bit of a mix to better outlook on GDP in the short term, as expected in the longer run. But he was like he wasn't dovish, that's for sure. But he was like very middle of the road where when the cut cycle may have started, there was a risk that that Bailey would have been quite dovish, but he was not. And then later on, he kind of repeated that we shouldn't be taking this cut as the start of a regular continuous rate cut cycle. So nothing is done for the next meetings. Pill afterwards repeated this as well. He's not committing to any further cuts right now, and he expects a bumpy inflation rate. So what happened then afterwards was that sterling stabilized. Actually, cable rebounded slightly as well. Euro sterling was still trading actually a little bit heavy. We then had the US claims coming out, jumping just a little bit, weighing a little bit on the dollar as well. But then those Q2 numbers, the labor cost as well showed a little bit of a weaker one. So the market got a little bit cautious on those numbers. And I'm sticking to the sterling. Sterling didn't move too much right then. Was even doing pretty well until the ISM hit the wires. And I have to thank Joao for pointing me to those ISM data, because I overlooked those outcome. Well, the calendar, the ISM in the calendar, because I was already too focused on what may happen today in the on the NFPs. But this one really sent the cat amongst the pigeons. Very weak and very bad, we can say, report. Green in the case of prices means bad, all right. And then here, and I've always said, like, we are employment week. The Fed is watching the second part of the mandate now with more intensity than it was before. They used to be solely focused on inflation. Now they're watching that employment part of the mandate very closely as well. And look what happened, a steep, very, very steep drop. I think this is a drop which goes back to the COVID lows, if I'm not mistaken. And just let me just verify what I'm saying here. We are getting, well, the COVID lows were lower, but we are, this is the first one that we hit right when COVID started to show up, and then a little bit later when the rebound started. But this is a fresh multi-year low, okay, on the employment index in the ISM. It is manufacturing. We still need to see services and etc. But this is one very weak report, and really it really weighed on everything. And just to then come back on the sterling. Sterling, as I've already been mentioning a good few times, is also a risk currency. So what happened is that on the small blip higher in the cable got reversed extremely quickly, and also all sterling crosses started to dive on the back of it. So we had, I'll show on the rates in a minute, we had quite a few moves on the sterling there. Sterling crosses dumped, especially versus the low yielders, but also euro sterling started to move higher again, and we are now very close to that prior 85 break level, right, on the euro sterling. That is not to do with the Bank of England. This is pure a risk play, okay? And of course, the market must have been a bit complacent, long sterling as well, and forced to get out when some levels were breaking. So that for the sterling. Now back to this ISM number and what it did on markets. It really sent shivers through the market. You all know, and you have seen what happened to the equity markets. By the way, if you look at what the Nikkei has done today, it's the biggest one-day drop since the 1987 Black Monday drop in the Nikkei, and when the Japanese in those days exceptionalism that actually rang the end to the Japanese euphoria, the start of it really that then accelerated in the 90s, of course. But we've seen like huge drops in all the equity markets and in all risks markets this time. And so yesterday, when the market was not yet completely in risk off before it happened, or safe haven territory before it happened, this has now clearly morphed into a risk off safe haven market, and we will look at stuff like the Swiss and the yen, of course, to see what happened, but also things like Aussie, for instance, had a bit of a knock on the head on the back of it. Okay. Now, overnight, what else did we have? We had, well, the Australian PPI, people saying that held up the Aussie, perhaps, okay, because we did, it's still, those were QT numbers, by the way, all right? So we still a bit a rear view mirror look, and we know that those QT numbers were still quite sticky. Excuse me, just a second. So we know that those numbers were quite sticky in the second quarter. Market trying to attribute the Aussie rebound from sub 65 the figure to this, I think it's rather a cheap excuse. It's just perhaps the dollar not picking too much of a side once the first move was done. All right. But a lot is risk related to what's happening in Aussie right now. So then we had French industrial production, again coming out a little bit weaker than expected, but the market has like bigger fish to fry right now, as we see. Euro yesterday couldn't find a bid, and also, of course, we know that correlations are saying that when the equity markets dump, and especially when the US equity markets dump, the dollar gets a short-term bid. That is what we saw as well on the euro yesterday, on stuff like the cable, the Aussie, for instance. That is what we saw, and especially if you look at the closest to the US emerging market, which is the MEX, of course. MEX got absolutely hammered because the MEX does not like risk off, and especially not looking at the calendar as well, as we've already been explaining a few times. The MEX is really very fragile for the time being, and yesterday got really hammered as well after those data. We've seen a Noki unemployment rate, and this is a bit we can qualify this as a little bit of a surprise for those watching the Scandies, right? This is the employment change is similar. Unemployment change is similar than the prior one, but it's a relatively big one for Norwegian standards, and the unemployment rate jumped back above 2%. So keep an eye on it. We know that Scandies are also related to risk, and so yesterday, no exception, Norwegian krona started to turn around. This unemployment rate may just keep it on its toes until the week is over, and then we will see how risk evolves for the rest of the day to judge what Norwegian krona may do next week. Rest of the day on the docket is the Mexican unemployment rate. I'm not sure. I think perhaps the investment numbers here even though it's also rear view mirror numbers, may actually, if this remains the same, may actually be a somewhat have a somewhat bigger impact than actually the unemployment rate, because it's expected to stay the same. But of course, the mix will be also impacted by what happens next, and this is going to be a big one, right? Especially after the FOMC, especially as I've been saying already a good number of times, that the Powell and friends are really watching the second part, which is employment of the mandate, very closely. And after we have seen, after we have seen those numbers in the employment sector slowly showing those flags, those yellowy orangey flags, and especially, and yesterday as well, we've got a confirmation on the ISM manufacturing data. This is going to be a very close one. The Bureau of Labor Statistics has some differences in calculations compared to other reports, and we've seen that time and time again, that these reports tends to defy the laws of gravity versus other reports. Okay, but we also have to note that many times we have seen revisions to the prior report which were weaker than what the report actually showed. All right, so we're going to have to look at the NFP. If they would print a negative one, that's going to weigh again on risk quite heavily. But I do think this time, okay, we may see a slightly different risk pattern evolve, because once you get to a very weak labor market, you will see similarities with yesterday, which is probably, if we get a really weak one, which is probably going to be, the similarities with yesterday are probably going to be weaker equity markets, weaker and lower yields. All right, but we've gone already quite a way in the yields, which I will show as well. But I've got the impression that if we get a real low one, and then I'm looking especially at this one here, because Powell said, like, yeah, for the time being, the employment rate is still pretty good historically. But he's also said a number of times that they are ready to support stuff, and they are ready to not let this derail. So if we would get even a 0.1 uptick here, I think it may have an impact on the dollar as well this time. So you may have an initial reaction on a weak one. Let's take a weak one. You may have an initial reaction of euro dollar, for instance, back down, cable back down. Just to name those two. But then it may be that those things are starting to reverse, because who says weak jobs over here should in the end not really be supportive for the dollar. Okay, so watch out for this afternoon, because it could have a little bit of a different face than what we had seen yesterday. Okay, so I'm just my line of thinking here, and we may already see a little bit of this happening, is that where the euro was really weak, euro dollar wasn't bouncing at all yesterday, it now tries to put in a little bit of a better performance, and that may be kind of the picture for the afternoon. So that's a few thoughts. Okay, now if this defies the laws of gravity again, and then so you get a print above 200K, let's say, and you've got because we can't forget the earnings, all right, and the earnings remain sticky, and you see, for instance, a move back to 4%, then we're going to have to look at other stuff, I think, because then you will see an initial move slightly higher in the yields, and you will probably see a slightly lower equity market. But if you get a good report, normally that's not too bad for equity markets either. And then you may see actually a little bit of a rebound in the equity markets, and an initial reaction a bit lower on the dollar, but then a bit of a comeback on the dollar. Okay, and then we are going to have to trade different pairs in a different way. Okay. So that's it, I think, for how I'm looking at how this thing is going to come out. So let's have a look at what's happening in the yield. Big washout since Wednesday already. Big washout in the short end, and well, in all yields, because we see the US 10s here is trading well below 4% now. But look where we are. We are back at the January lows, okay? So this is really hanging in the balance here. This report this afternoon is going to be quite important because the 2 years is about the closest, apart from the Fed funds futures, of course, is about the closest at what the market is expecting for the Fed's trajectory as well. Not specifically for 2024, but for the Fed trajectory going forward. And we can see now we are now pricing in we are now pricing in five cuts again. This is where we were at the end of the year, and we are back to that level, all right? So watch out for this afternoon. The tens as well, of course, but watch out what the twos are doing. Watch also out what the fives are doing, because that saw one hell of a dump also over the past week or so. And we are also nearly back to earlier this year levels. So we're trading around 380. What's that 3.75%? Okay, so that is another one to keep an eye on. The market is really sticking its teeth in now in the lower yield, lower Fed trajectory. Okay, so this is going to be these are going to be moving this afternoon, and these are, I think, going to drive. They will be driving everything, but they are going to drive the dollar as well. This is what I mean by there is a limit to how the dollar will react to certain moves. Yesterday was a risk-off move. Sometimes the dollar catches a bit on a risk-off move. That's just a correlation of things. When the equities drop, usually the currency catches a bit of a bit. We have seen this in especially the rest of the, let's say, relatively higher yielders right now is dollar caught a bit versus the MEX versus the euro versus the sterling, etc. One exception being the Kiwi, by the way, but I'm keep steering away from the Kiwi right now. But again, if we get a really bad report, this is probably going to move down to 380 on the tens, and that's where I'm saying, like, I think there is going to be your limit for the dollar if we get a really bad report. If we get a good report, there's going to be a few currencies. We know that the yen is extremely volatile. And the question today is going to be relatively simple, even in all the big volatility that we have. Will 148.5 hold or not? Get a weak report. This is going to be toast. And the next okay, I'll come back to you, Brian. So the next level is likely going to be somewhere around 146.5. I don't think that this little level here is going to hold. This is not even worth watching, I reckon. Even though there's a few lows around there, around 147.75. But looking at the volatility here, we have to take this volatility into account. I think if it breaks on a weak report, and if it's really weak, it's probably going to go to break. But again, be careful, because we can see if it's mildly weak, the market will probably try and break, but we could see a fakey breaky as well. So wait for a bit of confirmation. But if it's a real bad one, this is going to be toast, and then we're probably trading 146.5, 146 the figure, and I would suspect that we are going to end up closer to 145. It's a 2% move, I know, but you know, it's the yen. We did move 2% in the yen already, quite a bit. in the latest sessions. Yeah, so I wouldn't be surprised to see a three big figure move if the report is really bad. So we have to make a bit of a distinction. And while being on the yen, it's a good one because it's such a volatile one to make this kind of distinction. There's a distinction between a good report, a mildly weak report, and a very bad report. Okay, so we've been talking about that already a good number of times, but just to repeat, if it's a really good report, this one I think is back. It could potentially trade very quickly back at 151. And if it's a real good report, imagine that unemployment rate drops back below 4%. This could even retest 152. This is the kind of volatility that we see in the yen. If you see a mild miss, let's say the NFPs are lower, but the unemployment rate isn't changing. So let's say instead of 175 expected, we're printing somewhere 130, but all the rest comes in relatively in line. We could see a bit of a fakey breaky and then move up because a mild miss may be sort of okay for the equity markets. And we know that the yen is back on the risk train, very much back on the risk train as well. So we may see a bit of a fakey breaky and then go back up. And there perhaps your 147 3/4 may come into play as well. And then if you see a really bad one, that is yields tank, equities tank, that this is going to provoke this kind of move down to 145 in my opinion, and over time even lower. All right, and then I will have to revise what I said on the first day of this year, is that 2024 will close on with dollar yen above 142. So for my prediction, I would hope that the job market doesn't collapse. But anyway, I mean, predictions are one thing, trading is a completely different thing. So this for the yen. Then I'm going to move over to the Swissy, as Mark is already talking about Swiss as well. As I was saying, the revenge of the low yielders, and that was again another example yesterday. I've taken out a couple of intermediate levels, but we did have a few levels here as well. What happened in the Swissy? We were turning around and had that little blip back up to 88.20, but really that was toast relatively quickly when the ISM came out. And we are getting close to very interesting levels yesterday. And as I said, there are intermediate levels here around 88.30 on different time frames as well. So some people are trying to trade these. I think this could be an interesting level just for the close tonight. Okay, whether you're above, it's possible that we're going back to high 87s, even 88, depending on whether the report is really positive or not. But if we get a continuation of weaker data after yesterday's ISM, watch 86 3/4. 86 3/4 is the bottom of this channel, is also the 61.8 of when we hit the low end of December 2023. Remember when the Swiss was heavily bought into year end, and the move back up to 92.25. 61.8, 86 3/4 on the dollar Swiss. In Italian, they say molto importante, and this is very important, I think, to close the week here as well on the dollar Swiss, whether we are above or whether we can hold it, or whether we will trade below. To reverse the whole thing and to be able to get back up to 80, 88.80, let's say. Let's not talk about 89 straight away. That's going to really take a bumper report to get back higher. We need to get back above, start with 87.55, but then I think 87.80. 87.80 is going to be key here. Last low, retest, and then dump 87.80. This is one of the numbers that I'm going to watch for a bigger, let's say, a bigger rebound than what a good to mildly good report may show us. And then the trump card will be around 88.20. Okay, that's for the dollar Swiss. you let me see. Yeah, I first need to run through whatever I wanted to show you, and then I'm going to come to your questions. Okay. Euro Swiss as well. This is another one where the revenge of the low yielders really kicked in very, very hard. I find this a bit steep to really say, oh, this is going to be an important level. I think we are on the level here. 94, the figure is where things need to hold to close the week, or this could go all the way back down to 93, the figure, or 92 and a half even. Those late 2023 lows. Okay, this is a pure risk currency. All right, one of the pure risk currencies. Okay, so if risk does really well this afternoon, this is going to bounce, and then we can probably reach back 95s. All right, the first indication would be if we get back above 94 and a half and hold there. Right, so this is one of your risk currencies where dollar Swiss is a combination of risk and the dollar. So this could be actually a bigger mover than the euro Swiss if it really tanks. But this is perhaps a better expression of pure risk. Okay, so I hope you see the difference between dollar pairs and cross pairs. And then while I'm on this page, I'm going to straight away talk about the S&P. So we saw this trend line, which has been talked about in I think all the ForexAnalytix shows this trend line broken. We were trying yesterday to get back up there, but we stalled at the 61.8 of this first move lower, and we actually just tagged it. And then, of course, ISM did the rest. Once ISM came out, it was like, get me out of here. And we never looked back. So where are we now? Well, we are on the 50% of, no, what's that 50%? No, we are on the 38.2 of what we saw in April. The 50% is where's that 50% from? No. Forget it. I'm mistaken. Forget it. So we are here on the 38.2 of the April. You see, we had a bit of a correction here in the month of April. We are on the 38.2 here. So that is your first level to monitor, okay, this afternoon. Slightly below the prior low, of course, this is going to be in play, okay? We are going to need to move back above 54.5, 54.60 to go and have a retest of 5,500. Look, it's going to have to be a monster good report to break back above 5,500, I think, this week anyway. If you get a really good report, let's say I think we can probably move a little bit higher, and then we will see what we do anywhere between 54.5 and 55, okay, to end the week. But it's going to take a really good one, I think, to turn it around. But the market is volatile; it could do it potentially, but perhaps not today. But the market is in a bit of a state. I'm not going to call it a state of shock, but we are in a bit of a yesterday get me out of here move. So if we get a bad report today, this could start to look a little bit more ugly, all right? And then I would say, look at 5,300. We just had the prior high here, just below there. This is going to be your next level of importance. And if it's a real bad report, and this may be for next week perhaps, but if it's a real crap report, that means higher unemployment, lower wages, a very, very bad headline NFP report, why not next week go and start to think about levels of closer to 5,000 actually? But therefore, let first the market do its thing. Let's see that report. I'm not in S&P. Yesterday I was thinking about trying it around the 61.8, but I I didn't really. I was a bit engaged in stuff like gold and sterling, so I didn't really think of putting any S&P on. But anyway, so this is going to be another big mover this afternoon. All right. Um, and then lastly, I want to show you the mix, and then I'm going to quickly take your questions. Look where we are, back to the June highs. All right. So mix is, first of all, we know that it's fragile now, going into the U.S. elections, waiting to see what kind of rules and regulations Scheinbaum and AMLO will come up, actually even potentially before the official handover in September. And so this is when the equities tank MEX is now really feeling the pain. Okay, so watch out what happens this afternoon. If you get a bad report, you may see an initial an initial reaction a bit lower. But if the equities tank, this is probably going to trade higher, and then we could be potentially looking at levels 1920, 1930. But if it's really a stinker, this could it's an emerging market currency, right? We've done those 2.5%, 3% yesterday. If it breaks, why not? Go and have a visit back up to high 19 levels, right? Another pair that's really traded risk yesterday, and lucky, because as you know, I was a bit short of this one. And yesterday, when around the time of the ISM, we were trying to break that trend line again on the Euro Aussie. And Aussie is that's why I'm showing you this as well, because Aussie and Euro Aussie Euro commodity pairs are risk pairs. Okay, so when the ISM came out, this thing started to really reverse, and I was pretty lucky that as the ISM hit, I just had the time to get out of it around 165, the figure of the rest of my shorts. And look what we've done since. We are back. We really bounced quite hard. So that's your another pair to pay close attention to for risk this afternoon. All right. If it's a risk negative number, this could easily get back up to 167, and why not break it? Okay, this is, if risk does really well, I wouldn't rule out a retest of the 165 on the other hand. Okay, let me take a look at what you guys were saying there. Great call of a falling knife on the Euro Kiwi. You're planning to engage, Brian, you're planning to engage a dollar Swiss long at 86.70. Look, it's the level. It's the level. I've showed it. 86.75 is the level. Watch what the number says. As I said, if it's just a mild, very, very, very mild miss, let's say unemployment rate doesn't really move much, wages still okay. We just have like a small tick lower on the headline NFP number. Watch also the revision. If it's a mild one, it could be that after the moves that we have seen over the past days or week, which have been relatively violent and thorough, it could be that 86.75 level shows up, and then you're going to have a pretty okay trade. But watch those numbers first, right? And manage your risk on that one, because if it's really a bad number and it collapses through it, it could go very, very fast on the way down. Marcus, the market doesn't care overbought or not; they just sell it on the yen. The market was very short yen. Was short yen still. I think the very long termers, and potentially are still short yen for as long as 148.5 holds. But I think that the ones that really are trading very actively, they are, I think, flat or potentially already long yen. Because the moves have been so thorough. We have seen so much of rally selling in all the yen pairs. They're potentially already long yen, but it is fragile. And let's face it, the Bank of Japan has risen rates, and the yields elsewhere. You remember what I've been saying continuously. It needs the rest of the world to collapse around it, or to come lower around Japan, for the yen to materially strengthen and to stay stronger. Well, the rest of the world is coming down. Okay, I mean, if you look at the U.S. yields are collapsing, but the sterling yields are lowest for 2 years. The Kiwi yields are down. The Canadian yields are down. You look at the European yields are down. Everything is down. So that is causing the yen to strengthen. And actually today, even the JGB 10s yields are coming down. But I don't know what the 2-year is doing. Yeah, it's coming back to 40, which is still slightly higher than before the Bank of Japan. Okay. Morning, Catherine. Do you think there are any short opportunities in Euromex, or is it too dangerous? I have an order to short at 21, but wondering if that's foolish. Well, look, I've spoken about the dollar mix, but we're equally there on the Euromex. Let me go on a little wider time frame here. Order at 21, which is just slightly above here, to around here. Could be that this is your. You see, if I just have a little bit here, where does that put us? The 50% yeah, that's the 50% of the dump since November 2021, really. Yeah, interesting, around there. So around this prior high, around here, around here, around here. Look, it's another five. No, it's another 2.5% away. Know where your risk is, because it's volatile as well, Catherine, right? So if we really get a very bad risk report, traditionally euro crosses also against the risk of currencies, as we've seen euro Aussie as an example. Okay, it's also probably going to shoot. So your risk is going to be around here, 2160, 2170. You know, don't look for the round number, perhaps. Just look for a retest if you really want to do it. If you think it's overdone, if let's say we get a mild miss today and you think it's overdone, either you leg in smalls around here, 21, 21 and a quarter, then you do another one here if the market overshoots here. But be careful if it starts to break above those 21 and a half, 2170. Okay. Yeah. I still don't like the euro very much, but I have to admit it's done equal legs to the dollar mix. I would be very confident to be short euro mix again, despite whatever may happen in Mexico and stuff. I would be confident to be short euro mix if risk starts to do better again, right? That's about what I can say about it right now. Yeah, metals. Obviously. So for those in our room, I've been buying it again. Started last night around. No. Oh, go on a shorter time frame. Okay. Yesterday I've started to buy it again. Just around above. So we had this test in 2430. Started to hold. So as I said, I decided last night. So okay, let's give it a go. Looking also that the dollar was strengthening a little bit, but on weaker data with the yields coming down, my logic is that gold should not really be sold. And also with the geopolitical situation still in the background, right? So I bought a little bit. added some when we started to break above, and this morning I let some go, just to right around here ish, around 2064, where we are right now, just to reduce the risk a little bit. But if we get a really crap report this afternoon, reckon with again the same reaction as I said earlier, the same reaction as we had on the ISM. It could be that the dollar all of a sudden picks up a little bit, but hold 24 and a half, 24.55. And then I'm going back on the longer time frame. If it's really a crap report, I do think this high is toast, and I think we are going to fly through. And then the next levels that I have on the shorter time frame, oh yeah, it's around here, around 25.20. But I can see this correction here. I have an extension at 25 and a half. You know what? On a really bad report, it's possible. It's going to take a good report, and gold has also been volatile. On a good report, I would not rule it out, and that's why and what I usually do, I always take a little bit off, so my risk is first of all reduced, and I've got freedom in my book to add, or if I need to cut, it's going to be a lot less painful. 24.30. If it's a good report, 24.30. Watch what's happening around 24.30. Prior high, low, and then bounced. Okay, this is where we have to watch out with what's happening in gold. If we see a break below, there may be people running for the exit before the weekend, because we are again before the weekend, and then we are going to talk about this zone again. 24, the figure to 24, 15, 20. Okay. If we get below 24.18, I guess a few more may leave the boat, and or try to push it lower, and then 2400 is going to be a next level. But again, if it's a bad one, I think this is going to fly. The trouble with silver is that silver cannot have a too bad report, because then I would say that silver is going to underperform gold. Okay, you know that silver is an industrial metal. It needs reports which are mildly worse, which sends the yield lower, but not too bad, because otherwise gold, for instance, would be a better instrument in my opinion. But we did hold the break, so this is still positive. Okay, on a mildly miss, it could trade back around $30. But watch out if we break back below 28, 15.30, there-ish. Okay. Yeah. Oil move. Yeah, the last one. Yeah, oil. It didn't reach the level that I said it could reach. OPEC didn't do anything, but manufacturing numbers being bad is usually taken as bad for activity, and I think, Gavin, that is one of the reasons why oil dumped yesterday. You know, for oil to rally higher, okay, this partial geopulse, partial lower yields, because it reacts on yields as well. But when the world is not in a good place, usually your commodities and oil as well is going to not to be really good. And also we had a few average Chinese data out, right? So as I said yesterday as well, on phase, I was asked a question about oil. We actually put in like a triple, not a triple top, but those tops here are starting to look a bit strong. For oil to materially rally, when it will happen is we need a Chinese revival. If the market starts to buy into China at one day, then I think oil is back above $80 easily. But for as long as that doesn't happen, we're going to trade geopolitics, we're going to trade yields and economic activity. Economic activity coming down, although I'm going to repeat that services will still be quite important as well when we get them. But if you get economic activity coming down, it's usually not very good for that. Okay, yeah, yeah, that's what we were all looking for, Gavin, to get through it and then move closer to that 80 level, right? Yeah, I think, but again, most of the people were probably looking at a retest of that 80 and then decide what's going on there. But bad activity numbers are not good for stuff like oil. Guys, I've taken more than enough of your time. Be very careful with what you do this afternoon. I hope I prepared you a little bit for what's going to happen. You know the big levels. I didn't cover everything, but you will see for the people in our room, I've put a load of charts in there, including in sterling. Sterling, we are back on the 85 level in the euro sterling. Okay. Also, as I said earlier, sterling is a bit of a risk currency as well. We rallied back through 84, 55, 60, and we're back here. This is a factor of risk. Also, the move lower in cable is a factor of risk. Keep an eye on what's happening today. 127, 35, 60. We are in the zone here on the cable. All right. Watch out. This could, if the number is really bad, you could have this initial reaction, getting even down to like mid 126s, but then watch out if the dollar starts to weaken. So watch two things: risk and the dollar for this afternoon. All right. Have a great Friday. Have an absolutely smashing weekend. No horror stories on Monday, please. And I'll see you all in the room, or for those who are not with us, I see you on this little show on Monday again. Bye-bye.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.